you don't actually have a strategy problem. What you're about to learn in this video is going to completely change how you see your trades, because the biggest mistake traders make happens after they enter. It's not before. And once you see it, you won't be able to unsee it. So I want you to stay with me in this video, because near the end of it, I'm going to make this click for you in a way that explains why your results in trading don't actually match your strategy. So before a trade, everything feels extremely clear. You can see the setup, you can understand the ideas, you can understand what you're supposed to do, and you know the risk, and it all is making sense. And then you go to the screen where you click buy or sell, and then something shifts within you. Suddenly, you're watching every single tiny move, every single little squeeze of a candle makes you start to think, is this working? Did I enter too early? Should I close this out? Should I give it more room? And so when you have these thoughts, it feels responsible. It feels like you're doing the right thing, and it feels like you're managing the trade. But the actual problem in your trading is starting right here, because none of that thinking was part of your plan before you entered. That is you reacting in real time and just calling it management. So before the trade is where the clarity comes from. After you've already entered, all of that thinking is new decisions. And this is the part where most day traders are getting stuck, because real risk management is actually extremely boring. It's decided before the trade ever even happens, before you even click a buy button at all, because your risk is going to be set, your position size is set, your exiting idea is set. You think all those things happen when you see the chart and when you decide what you're going to do for the day and when you feel like you want to do what you want to do. But I'm telling you that when your risk, your position sizing, and your exiting and entry ideas are always the same, your job is very simple when you get into a trade. You let it play out according to what you said, and you exit when the plan says to. It's a very mechanical system. I like the word mechanical so much because the word mechanical describes something that has no room for emotion to take over. It doesn't make emotion absent, but it doesn't give it room to play. What starts to happen is it actually lets your trade play out, and you exit when the plan says so. So what most traders are doing is they start making new decisions once money gets involved. Once you start to see what could happen for the day, when you start to remember, oh my gosh, how much I have in my account, that's when you start to make new decisions, and your risk is going to start changing. Your position size changes every day. How you enter and exit changes every single day. And this is where trades literally change mid-execution. Like, you are supposed to be trading a certain way, but all of a sudden you just start executing whatever you feel like. So I want to give you a concrete idea, and you can kind of see yourself in this and how it looks in real life, because what can happen is you enter into a trade by pressing the buy button, and you're expecting a quick move. Let's say you're a scalper. You're scalping, which means you're looking for volatility. And it's supposed to be a simple in and out, maybe 45-second maximum trade. But then price slows down when you thought it was going to push. So it's not reversing, but you had this idea in your head, oh, it's supposed to do X, Y, Z. So it's not reversing. It's only slowing down, but it's just not moving as fast. But then that's when your brain steps in and it says, oh, maybe it just needs more time. Maybe, it's going to become a bigger move because it's slowing down, and I don't want to get shaken out. And then you start to have this whole different rabbit hole where people talk about money, the market movers, and they're trying to get all of us small dogs out of here, and they're trying to shake us out. And you feel like you have to be the underdog and stay in every single trade so you don't get shaken out, and you don't feel like you're a retail trader, when at the end of the day, all a retail trader is a person that's not trading with an institution. All of us are retail traders, regardless if you're making $1 or $10 million. You are a retail trader if you're not trading with a huge institution where there's hundreds and thousands of people trading along with you for one company or one corporation. So when you have this idea of, I don't want to get shaken out, or your brain starts to step in and say, oh, I need more time. And is this going to be a bigger move? Without you even realizing it, that's when the whole trade changes, because you had entered a quick trade, remember? But now you're actually holding for something bigger. You're no longer scalping, first of all, and you didn't even decide to change the plan. It just happened. And this is the moment that creates so much confusion later. And you feel like, why can't I not follow my rules? Why can't I do Why am I not making money? I know what I'm doing, but why? It's that you don't break your strategy. You are just slowly replacing it mid-trade. So even though you're not technically doing completely the opposite of your strategy, you're still not following it. You're not breaking it completely 100%, but you're slowly replacing it while you're trading. And that is so dangerous. So in a minute, I'm going to explain how this makes your exit feel so hard. And I often had students who will say, exiting is so hard. I want to make my losses smaller. I don't know how to cut a trade. I can talk from pure experience, right? This is going to explain why exiting and cutting your trades feels so difficult. Okay, I'm going to explain that in a second. But when it's time to exit your trade, everything is going to feel so messy for you before you can understand why to exit. Because what's happening is you're hesitating and you're second guessing. And you're holding longer than you should, especially when it comes to a scalping trade. You know your maximum amount of time in a trade should really be like 40, 50 seconds. You know that. And then later, you look at your trades and you're like, oh, dang, I was in there for an hour 45. How did that happen? And then you start telling yourself, oh, my exits are just terrible. I just don't know how to exit. Exits are not the actual problem. They're not the actual root problem of why you can't cut a trade. What's happening is you're trying to exit a completely different trade than the one that you entered. So you entered a quick trade and now you're trying to exit one that you've been in for an hour, 45 minutes. And that mismatch is what's creating the hesitation. See, when you have a rule book and you follow it, you no longer have that mismatch. And all of a sudden, like nothing, like a drop of a hat, you can exit trades even in a loss. You don't have any more hesitation. But when you understand that mismatch, this is where everything is going to start to connect and you can actually cut those losses and avoid blown accounts, because this happens constantly and it's only going to get worse as you gain experience, because now you can see more of the market. This is why my channel is for experienced traders, because it's extremely worse for people who have already been profitable at some point or that know a lot about trading. Because you have so much experience. So now you've seen more of the market. You've seen more patterns, and you've seen more possibilities, and you see more reasons why a trade could work out, because you've seen something go up in the turnaround. You've seen something that shouldn't have happened happen. You've seen a stock drop $30 in 5 minutes. You've seen. So because you've actually seen that in real life, during the trade, your brain starts adding ideas of like, oh, this could break. This could go strong. This higher time frame looks real strong. This could be a trend. This could turn around. But I'm telling you that you're not in one trade anymore. You're juggling multiple trade ideas literally at one time. And that's why your execution is so messy. If your execution wasn't messy, you would be able to cut any trade, period. Mechanically, without emotion having room to play, because execution needs clarity. It does not need options. The more options you give yourself, the harder it is to exit. And because you have so much experience, you have so many options. So right now I'm going to give you a quick reset of everything we've talked about. Is that more analysis is not going to improve your execution. It's going to quietly destroy it more. And you have to be so aware of this the more you get experience and the more that you trade. Because the shift that's going to change everything for you is, before entering a trade, you can just ask yourself a very simple question. And I'm going to break this down. What is this trade supposed to do? Not what it might do, not what you want it to do, but what is it supposed to do based on all your confirmations and all of your indicators. What is it supposed to do? What are you seeing it do? Is it a quick move? Is it something you can scalp? Is there enough room to get in and get out? Are you reacting to it? Is the like reacting to volatility? Is it a continuation? Is it a reversal that you're trying to catch the bounce? Like, you need to have a purpose. Now, if you're a swinger, your purpose is price movement. If you're a scalper, your purpose is volatility. So you ask yourself, is this trade going to be volatile? Yes. Okay, I'm going to enter. Is this like, if you're a swinger, is it supposed to be a nice price movement where I can get in and get out and I see a formation I can get into? And then that is the reason why you're entering your trades. And then decide what tells you the trade is finished. So, like I said, you're entering off volatility, you're exiting off that same reason. When volatility is complete, or it's gone, or it pauses, or is no longer doing what I want it to do, I'm getting out of there. When I'm swinging, if price is no longer moving to my price movement, how I thought it was supposed to move $5 up, now it just is kind of stuck at $3, I'm going to take that profit and leave. Because once it's very clear why you entered, your exit becomes exponentially clear and it stops becoming so emotional. It literally is mechanical. It's very obvious. And this is going to eliminate all of your exits that you have struggled with in the past, because I struggled with it too. But this leads directly through to a real breakthrough. I'm telling you, this is exactly how I did it for myself. How did I end up being able to cut my losses? How was I able to end up being able to just cut trades when it didn't work out? How was I able to stop blowing accounts? This is the video. So you need to come back to this video if you ever struggle with it again. This is how to do it. Because during the trade, your job is not to rethink everything. Your job is literally to follow the plan that you already made before you ever even looked at a chart. There's a system and a plan that you have on how you trade, whether that's through price movement or through volatility, and you need to go and follow that plan, because the moment you start to make new decisions mid-trade, you're no longer following that system. You're improvising while money's on the line, and that is how you lose money, because every dollar, I learned this in getting coached in Charles Schwab, you are exposing your money to the market when you trade, and every dollar that you expose can be taken from you. There's no way to guarantee you're going to get back the money that you put into the market. So when you start improvising with money that you can't even guarantee is going to come back, that is what's going to destroy your account, and it's going to destroy your consistency faster than anything else. And that's when you see, oh my gosh, like I've had it happen to me too. Make profits 4 weeks straight for an entire trading month, gone in one trading day, because I started improvising with money instead of following the system that literally made me money 4 weeks in a row. So if this video is hitting home, the next video in this series is going to go deeper into what happens after a loss, because that is where behavior shifts even more. And it's linked below in the pinned comment, and it connects perfectly to what we're talking about here. So if you've ever felt like your strategy works, but your results do not match and your account does not match, you're probably not failing in the strategy department. You got that under lock. You are a trader that already understands that part. What happens is you're changing your strategy while the trade is happening. And most traders never realize that this is what they're doing. So to recap everything we talked about in this last part, is that you don't actually need a new strategy. You need to stop rewriting your trade mid-execution. You need to follow the purpose that you selected when you became a profitable trader. Do you trade off price movement? Are you a scalper? Are you a swinger? Are you trading based off volatility? What do you want to do? And stop picking new strategies. Just stop rewriting the trade when you're in it. And this is just step one. So the next step is going to be understanding what happens to your behavior after a loss, because honestly, that's where the problem compounds very fast. And if you're still blowing accounts, you need to watch that video next. And if this helped you see your trading differently, subscribe to this channel so you don't miss the rest of the series. This is building step by step, and I'll see you in the next video.